Hey guys, welcome to an introduction to my Sharesies profile. So currently, $26,000 in there. 20,000 of that I've put in, and my returns are about 31, 32%. I have averaged that money in over time, just trying to put in as much money as I can really to get that money velocity. So we'll just go through each of the stocks that I hold in this account. So firstly, you can see A2 Milk has not had a very good time. Just been continuing to buy it as it goes down, really. Not much to say about it. I've lost money. They just got into a really bad scenario, so I couldn't predict that, obviously. I've got Abano Healthcare, which I regret not putting more money into, as it's got me some huge returns. As you can see on this graph, I actually pulled a little bit of money out as it rose really fast. And I mean, looking at this graph, looking where I pulled out, like you can see kind of why I did that. There were just some huge gains that I expected to be kind of like this spike here, where they would lose those gains, but apparently they didn't lose those gains, so bad decision on my part. Next is AFT. I actually bought this one on a recommendation from another YouTube channel called Stocks with Sam, and worked out pretty well. I bought back down here when he recommended it, and obviously you can see it's gone up quite considerably. I was up quite a bit more than I am now. It's come down a little bit, and also I think I bought a few times at a higher price, which cut into my profits there as well, my percentage profits, that is. In New Zealand, so I got in them at a very good time, right down at the bottom of the market. I can show you, right down in the market crash, the COVID market crash, so managed to get quite hefty returns on that one. That was not the most educated decision, me buying that, but my thought process was simply that it's government backed, it's not going to go under. Eventually it's going to recover, and it used to be worth $2.75, so buying it all the way down at the bottom under $1, and then probably just a bit over $1 after as well, seemed like a pretty safe bet. Our veggie group, probably a bad decision, I don't know. We won't go into that one. Beyond Meat, that was a recommendation from Jeremy from Financial Education. More of a recent position. I'd like to put more money in, but it's gone up from like 125 where I started buying all the way up to 139, so I would need it to come down before I look at buying more. Callaway Golf, another recommendation from Jeremy. It's just gone absolutely insane since I bought it. Really high, really fast. Canna South. So this is perfect example of a poor decision. I got lured in by the hype around it. All my friends telling me this is a really good investment. People who I considered to be very smart telling me this is a great investment. So I just jumped in and bought it regardless of what the stock was actually doing. And as you can see, that kind of meant that I bought at a high. Maybe the company is going to do well in the future, and that doesn't change, but just the price that I bought at was not good. But I've bought a bit more kind of when I thought they were bottoming. Well, I mean, I bought some more there where I thought they were bottoming as well. And I was obviously wrong, and then they reached kind of the support line here and bottomed out in there. I hope at least they could, I don't know, take another turn for the worse, but I hope not. So I bought a bit more in there, and then they've come up a bit since then. Del Taco, another one from Jeremy, another recent one. It's a bit of a small market cap. This one, 341 million, which relative to New Zealand stocks, that's probably quite big, but relative to some of the other American stocks, it's quite small. So it has good potential in the future to become maybe like a $20 to $30 stock, I would say. Dropbox, that's one that Jeremy advocates very highly. He believes it has huge potential in the future, and yeah, I kind of was inclined to agree with his opinion, as he's far more educated than I am on this topic. So yeah, I've put quite a lot of money into that, 1,400 in this account in US dollars, and even more, a bit more in my Hatch account as well. Fisher & Paykel, usually a great growth company in New Zealand. Obviously you can see kind of where I've bought in, and probably would have been fine if I didn't continue to buy at these higher prices. I should have maintained these buy prices here. That was fine, but these ones, like, I should have expected that given how fast it was going up, it was going to have a little bit of a correction. But then also they've had some, well, they were kind of profiting, I believe they were profiting off the kind of the pandemic situation, more healthcare needs. But now that it's kind of looking more positive on the pandemic front, their stock price is actually being dragged down a little bit. Foot Locker, yeah, I've got that in the other account. Another one of Jeremy's picks. A bit of an older one, I think. Yeah, back in August. As you can see, I probably shouldn't have bought more there, or who knows, it'll probably continue to go up. Like, it seems like a pretty good business model. But yeah, my other account is closer to this buy price than it is to this one, which is better. Helenensteins, I was very proud of this one. So as you can see, I started buying close to the bottom of the market, I think around April, and then the price went up and then started coming back down, just generally trending down. And I saw that, and because I like the business model, I shop at Helenensteins myself, so I feel pretty comfortable that they were going to make a profit, like continue to make profits into the future, and they were going to come back to where they were, which is, well, they've actually come back higher than where they were. Also because, I live in New Zealand, I can look at the stores, so just every time I go to a mall, I'll just have a look at what Helenensteins is doing, and they've been insanely busy. So that was another reason I kind of felt so safe to put like $1,000 into it, over $1,000 into it. And yeah, as you can see, that returned me quite a lot of money, doubled my money, which I was very happy with. Kathmandu, pretty similar mentality. As you can see, I bought right near the bottom, and this one's just continued to go up, really. Did buy a little bit more on these bits here, just because I felt like I wanted to increase the position, because it's not quite as small, not quite as big as the Helenensteins position, and I kind of felt like they were both worthy of my money, really, equally worthy. And yeah, so I wanted to increase the position. Obviously you can see I was not able to increase it enough, because it just steadily grew, and I didn't put enough in from the start. Next one, Nordstrom, another one from Jeremy. I can't really say much about it. It's just gone insane. That's all I believe Wall Street kind of clicked onto the fact that it was a very good value stock, and it went crazy. Thank you to Jeremy for letting me know about that one. Pushpay, this one's just been all over the place, up and down. I haven't put much money in. It's, yeah, as you can see, like, I've gone, like, it's lost me a lot of money, and then it's also been up real high as well. I've been up as high as 18% up. I think I've been down as much as 18% down as well, so it's just kind of bobbing all over the place, really. I don't want that position really to be there, but I'm also not going to sell at a loss because it feels too much like trading to me. Qualcomm, just a small position. I want to put more in, but personally just looking at that graph and seeing how much they've run up on the 5G hype already, like, I can't justify putting much more money in, really, with my current knowledge of the market. Maybe it'll go up heaps in the future, like, and I would have missed out on that, but personally it just feels like I don't want to buy at that high because it has more potential downside risk. Simon Property Group, one of my early on acquisitions, just a turnaround play. I originally bought like way back here on my Hatch account, and then bought in here as well in my Sharesies account. Yeah, not much to say about that. Sky City, it was one of the early on purchases as well. As you can see, right around April, first bought in, maybe 31st of March, and then kept putting money in as it went up quite substantially, and then got to the point where I'd built out a decent position, and that was kind of enough for me. I also bought on this dip in here as well. Yeah, decent returns. Not much to say about that either. Kind of like a New Zealand turnaround play, really. Slack, another one of Jeremy's picks. I believe he even said in his initial video that they're likely to get, or they could potentially get an offer to be bought out by another company, and that is exactly what happened, like around here somewhere, and then they just went insane. Their stock price just went up like 50% on that news alone, and yeah, now I'm up 60%. Square, I honestly don't know much about this company, but I just heard from so many people that it was a good investment that it was hard to say no, which is really not a good way to invest, but I did do that, and it sort of paid off. Yeah, 35% gains is not too bad. Stitch Fix is another one of Jeremy's. In fact, all these last four are all picks from Jeremy. Stitch Fix, really innovative company. Kind of uses like algorithms and potentially like artificial intelligence and all your data and stuff to kind of predict what kind of clothes you'll want to wear, and then shows that to you, and you can decide whether you want to buy that or not. So very innovative business model, and yeah, I really liked that, and it was all online and everything, like lots of technological developments there. So really like innovative companies, like they're going places in the future. So bought them on Jeremy's advice as well. Upwork, absolutely insane. I got an even better entry point in my other account, and yeah, they've just it's gone insane. I couldn't even really say why, to be honest. Next one is Walgreens. Walgreens Boot Alliance, and yeah, it's another one of Jeremy's. Pretty recent that I started building this position, 18th of November, so yeah, really recent, barely over a fortnight ago. Based on Jeremy's video, and he was talking about how they're likely to be distributors of the Rona vaccine, and that will likely bring in a lot of customers into their store. He used to be an employee at Walgreens, and during his time he saw it when people would come in for flu vaccines and such, they would end up buying a lot of other products, which increases revenues and increases profitability. They make more money, it's good for them, which if we've got money in their company, good for us too. Yeah, just what is that one, 10% gains on there so far, which is fine by me. Final one, Wynn Resorts. I really like this one, to be honest. Like, if you just go and look at their buildings, like, they look amazing. They're the nicest hotels, like, on the strip. So I didn't need much convincing to buy this one, and it was also apparently a very good value when I bought it. First bought it around $72. I wish I had bought more when it tipped under $72. It was even in the 69s for like a very short period of time, and I did not put enough money in, but $1,000 was kind of where I felt safe putting like that much in, which, yeah, I mean, it's made me $500 US, so pretty happy with that. So that's all my Sharesies stocks. So sitting at 6,333 profit. That number is slightly off, that's fine. And yeah, I really like this graph. Like, it shows how much I've been willing to put into the account myself. Like that bottom dotted line, the grey one, it just shows how much effort I've put in, just saving money, all my money basically, and just putting it into the stock market. And all this at the same time, like, I bought a house in here, like, when was it? About here. I bought a house. So even with the buying of a house, I was still able to put in heaps of money, and even now I've got a mortgage to pay, like, still putting in heaps of money. And then obviously my gains have just increased an insane amount as well in that time. So really happy with that. Also, another thing I've done is co-located all my stocks purchases into a profile on Yahoo Finance, so I can see it all combined here. The thing about this one is that it doesn't calculate in any fees that I've paid at the different on the different apps. So it'll say here that I've got $11,000 profit, which is a very nice number. But it doesn't really take into account so say I've put 27,000 in myself. No, sorry, 27. So if you look at this top number here, it doesn't really look like I've got that full profit, because I'd need 37 for it to be 10,000, and so it doesn't even look like I've got 10,000 profit. But it doesn't calculate in the fact that I have $700 in cash in this account, as you can see there at the top. And it also doesn't calculate in any of the fees that I had, so it just calculates the prices that I bought them at and how many shares I have. So if I go into here, all the information it has is how many shares, and well, it only shows the market value, but there all it takes is shares and my cost on the shares. So basically that means that it's not as accurate as like, from my point of view, as I've put that money in, it feels like I've only got like a $10,000 return, but it says 11,000 because technically that's how much the stocks have made me, but then it's kind of writing off the fees. It's completely ignoring them, but that's fine by me. This is accurate enough, and well, technically it's more accurate than the other accounts. It just, yeah, it doesn't take into account the fees, but I'm more than willing to just accept those fees as kind of expenses because they've made me this money. $11,000, so yeah, pretty happy with that. Unfortunately it doesn't show you my total gain unless I click on them, but I mean, I'll show you a couple where I've put like a separate one. So in one account for Simon Property Group, I've got 37% gains, which is my Sharesies one, I believe, and then in Hatch I've got 65%. So you can see that in quite a few stocks that I hold in both accounts. So 83% gain and 125% gain on Upwork, which is very nice. But yeah, that is my Sharesies profile, and it's also my combined stock profile. So thank you for watching this video, and have a nice day.